Hey, what is going on, guys? Welcome back to another crypto video. And today is a very exciting video for me because this is something that I wanted to do for a long time. Now, we are taking a look at the technical indicators that I use for charting, and I'm going to explain how each indicator is used and what it's meant for. And I'm going to give you some websites that are also going to help you with your uh, knowledge of this great space that is the crypto world. Now, this video is going to be a bit long, so strap yourselves in. Leave a like to spread the word if you enjoy this content, guys, because the crypto algorithm doesn't really like crypto videos, and the YouTube algorithm, I mean, doesn't like crypto videos. So if you would be so kind to leave a like and a comment below, that would be much appreciated. So first of all, we are taking a look at support and resistance lines. By the way, I'm going to have timestamps in the video just so you don't have to listen through all the indicators. Maybe you know some of them, maybe you don't. Just click through the video to find the one that you need. The first one is the most basic one, and the most important one is the support and resistance levels. So these are going to tell you the trends of the market, basically of the crypto chart. So what they are essentially is they're going to tell you where the price can bounce off and where the price is going to have a bit of a fighting going on. So for example, what is a resistance level? So as you can see, this is where this crypto topped off. Now I'm taking a look at Theta, by the way, a great project. It was on a roll recently. So it peaked here at almost $15. Yeah. So now this $15 mark is going to be our resistance level because as you can see, we had that wick up there, and the sellers sent the price down because the selling pressure was a lot stronger than the buying pressure. So we had that wick up, they sent us back down, and the price went down, correcting all the way to uh, $10. So now this is our resistance level. So how do we mark it? You hold Alt and H together. So Alt and H on your keyboard, that's gonna get your resistance level. So this is gonna draw a line, and you can have it as any color you want. So to change the color, you press on the line, right click on the line, and you're gonna have the color tab here, and you can change the color to whatever you want. No, that is our resistance. Now, how we draw support lines. And the difference between a support and a resistance line is that it all depends on where the price is. So the price is here right now at almost $13. So this $15 mark is going to be our resistance. Now, if we are going to draw a support line, that would be below the current price. So as you can see, for a resistance line, we need to have as many touches as possible. For example, this is a resistance level. So you can expect the price to bounce off this level here because that is where a lot of fighting between the buyers and the sellers is. So another great resistance level is over here. As you can see, we have two touches there. This is a very good resistance level over here. So you don't really have to overthink it because it's not that difficult. You just see where a lot of touches are, and you can also zoom out. So zoom out as much as you can. That way you can spot them a lot more easy. So yeah, you could say that there's a resistance level over there as well. So these are going to tell you where the prices are likely to bounce off of and keep on going up, or if they break down, that is your next resistance level that you're looking at. If they break down, for example, here is a good resistance level as well. So you can have a lot of them, but it's not really it's not really important to have a lot of them, but you could, have as many as you want. For example, the next resistance would be around here because as you can see, we have this wick up here, this wick up here, this wick up here. We have these couple of candles ending up on this price here. So that's our next resistance at $13.36. So that is how you draw resistance and support lines, guys. So we're gonna remove them right now. So yeah, that is basically how it works, and that's how you draw your support and resistance lines. And one other thing is that they can be horizontal as well. So, for example, this is a resistance line over here. There we go. Look at this, the price bouncing off this level right here. That is a very good resistance line. Now, you could say that there is another resistance line in here. Look at that. Price bouncing off nicely. Look at that. That is another resistance. So if we were to drop below this resistance, this would be the next resistance that you would be targeting. So this is how you can draw your resistance lines as well. Also, you can do that with actually support. I'm sorry, I did say resistance. These are these support lines. Now, if you were to draw a resistance line this way, so we could start all the way from here and go all the way up. So you don't have to get it cleanly like on the top of the candle. It doesn't have to be that way. The point is to have as many touches as possible. So for example, that could be your resistance level. There you go. You could have it go all the way like up there. And this way you're actually creating a broadening channel. As you can see, if we remove this, or actually we could just hide it for now. There you go. That is a broadening channel that you just created. Look at this. You can try doing this at the same time with me, guys. That's going to make things a bit easier. So what I did is I went here to uh, this bottom, to this trend line here. You have a little triangle over there. You press it and you can add it to your toolbar, to your favorites. That way you can access it from this little bar over here. That would be a lot more easier. So this is a trend line. So you set the trend line as a resistance and as a support. And now we have this broadening channel with a clear resistance level and a clear support level over here. Now, yeah, that is support and resistance, guys. Wow, that's been 7 minutes already. I'm gonna try to do it a bit faster, but this is gonna be a pretty long video, but it is worth your time because the knowledge you're gonna get from this is going to help you a lot. So now we are going to jump to exponential moving averages. So next up, we are taking a look at the exponential moving averages. Now, I do use three exponential moving averages while I'm taking a look at charts. And just so you're not confused, the exponential moving average, EMA, is a technical chart indicator that tracks the price of an investment over time. The EMA is a type of weighted moving average that gives more weighting of importance to recent price data. So out of all the moving averages, and there are a couple of them, there is a simple moving average, there is a moving average. This is the better one to use. Now, how do you access it? You go to this little section over here, which is called the technical indicator, and you type in EMA. Now you're going to get this moving average exponential. Now you click on it, and you're going to get one of them over here. Now you need three of them, so you can click 3 times, and they're going to pop up over here. So, for example, this first one, there we go. You have this little settings over here, format. You click on that, and on input, you put that in length, you put 20. So this means that we are creating a 20-day moving average, exponential moving average. And on style, you can pick any color you like, and you can set all the things that you want to change over here. But they're not really important, the color or whatever. The thickness of it doesn't really matter. What matters is that it's a 20-day moving averages. Now this just shows you a great line of support. Look at this. Some people use the 21-day. I like the 20-day more. A lot of people like the 20-day moving average more. And look, this acts as a very good resistance level. Look at this. Sometimes you break below it, but once we break below it, we start looking for the 55-day moving average. And this is another moving average that we use. And a lot of people like to use the 50-day. The 55-day just works better for me. And from what I learned and from what I have learned, this is the better one to use. And this acts as a support level as well. So if we do break down below the 20 EMA, this is the next one that we look for. And if we break down below and we bounce off the 55, that is a good sign. That means that we have refueled and we are ready to skyrocket back up. And the last but not least is the 200 EMA. Now, this is the one that usually we don't touch all that often, but if we do, that is in a bearish scenario, that is when the price is breaking down, and that is not very healthy. But as always, if the more down we go, the lower we go, I'm sorry, the higher we're going to go up. So you bounce off of it and you go straight back up. Well, not straight back up, obviously, but it is it is not very healthy. But in a downtrend, that is what you can expect. Now, the 20 and the 55 EMA, like I said, is a very good resistance and support line. As you can see here, we didn't manage to break through this 20 EMA. We struggled for a bit, and then we did eventually break through, and we closed above it. By the way, this is the 4-hour chart. All these technical indicators that I'm showing you right now are good to use on a 4-hour, a 1-hour, or a daily chart. And you could use them on a weekly chart as well. That is okay. So yes, now the 20 and the 55 EMA act as good support levels, and you can expect, for example, we had this big impulsive wave here. So you don't buy over here. You don't buy the top guys. You buy over here, or you wait for a correction and a retest of this 20 EMA. That is how it works. That is how smart people invest. Because if you buy at the top and you go down all the way here, you're just waiting, right? You're gonna be waiting for a long time for the price to come back to that all-time high, and then you're gonna start earning, and that's not what you want to do. So never buy the peaks, guys. Now, yes, these are the exponential moving averages. Now, if I do a lot of explaining, that's going to take a lot of time. I'm going to have a websites linked for you guys where you can learn a lot more and read about them and do your own research. I'm just giving you the basics here. So next, we are jumping into the Fibonacci retracement. So Fibonacci retracement levels. Now, Leonardo Fibonacci came up with this retracement, with these retracement levels almost 300 years ago, and people still use them in trading and charting to this day, which is incredible. So Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. They are based on Fibonacci numbers. Each level is associated with a percentage. Now, you don't want to read all of that right now. I'm going to have this website linked in the description so you can do your research. Now, basically, key takeaways. Fibonacci retracement levels connect any 2 points that the trader views as relevant, typically a high point and a low point. We're going to get into that in a second. The percentage levels provided are areas where the price could stall or reverse. The most commonly used ratios include, we don't need those right now. These levels should not be relied on exclusively, so it is dangerous to assume the price will reverse after hitting a specific Fibonacci level. Now, this is important, guys. You should not rely on one indicator on its own. You should use at least 3 to 4 indicators. And if all of them point to the price going up or down, that's when you should make a move. Because relying on one indicator is not good. That's not very good. So going to this toolbar here on the third one, you press the triangle. Going up, going down here, but actually, it's the Fib retracement. You add it to your toolbar so you can access it a lot easier. Now you press on it. We start from the top all the way to the low, like that. Now you can do the opposite, where you go from low to high in a uptrend. So now we are in a downtrend from this impulsive wave. That's why we go from top to bottom. If we were to have another impulsive wave over here, then we would start this Fib retracement from here all the way to the top. I'm going to show you in a second how that works. Now, so we can see we did peak out over here, and your retracement at first is going to look a bit different. That's going to change in a second, but I'm going to show you. So I'm going to show you in a second. So your key takeaway here is that the 0.618 level is the golden ratio, the golden pocket, so-called. So this means that the price is most likely to come back to this area after an impulsive wave or a bit of a downtrend. The price is like 9 out of 10 times the price will come back to this fib level. Now, the zero point 0.5 level is the level where the most fighting is going to be occurring. That's when the buyers are fighting the sellers the most. As you can see over here, I'm going to zoom in for you guys so you can see. Look at this. This is a good support and a resistance line. Well, now it is support line because we did break through it right now, which is looking very bullish. So typically, if you break through the 0.618 level, that's when you expect the price to skyrocket because there's not much going around over here. So the price is definitely going to go up. And if we did drop all the way to here, then you would look at these 0.236 and the 0.382 levels as support and resistance. Now, this doesn't mean that the prices will go here 100%. This doesn't mean anything. This is just one of the indicators to use, and it's really easy to use, guys. So this is if we are in a downtrend from the impulsive wave. Now, let's say that if we wanted to take a look from, let's say, this level over here. So we go to our toolbar, press on the fib. So if we wanted to go from here, all right, let's take it like that. From the bottom to the top. There we go. So actually, let's just make it a little bit lower. All right, that'll do. So as you can see, we did have a lot of going on around here on the 0.5 level, like I said, and the 0.382 is a level, as you can see over here, that had a lot of resistance. So, but most of the times you're gonna find yourself placing the fib from the top to the bottom. Wow, already 17 minutes, guys. I'm gonna try to speed this up a bit. So that is it for the Fib retracement. I'm gonna have a link to a website that's gonna teach you a lot more than I can within this video. So yeah, jumping into the volume. So now the volume is one that I use in pretty much all my charts. You go to technical indicators and you press, you type in volume. There we go. You press on it and you click on it, and that's gonna bring up this volume chart over here. Actually, hold that thought. If we were coming back to the Fib retracement, this is what I wanted to show, the settings. I'm sorry. So once you have your Fib up, you can press on it. There you go. You press on it, and you have this little mini bar, this settings bar. You press on this cog. And these are the settings that I use for my Fib retracements. So you can copy them, stop the video, copy them. This is just going to make it a lot easier for you to use. All right. So stop the video right there, and we're going to jump back into the volume. Now, what does the volume show? The volume shows that how many coins are actually traded. So as you can see, the volume was very high over here. And look at the price. The price is high as well. So now the volume went down. Now, when the volume is up this much, you know that the price is going to come crashing down. And that's when you have to sell, when you see the volume coming up like this. You should have sold over here. And yeah, that's basically it, guys. This indicator is used with some other indicators that I'm going to go through right now. But the volume is very important because you can based off of volume, you can tell what is going on. Is the crypto hot right now, or what's going on basically? So now with Theta, we can see that it was hot for the last couple of days because it did actually make a 3x in a couple of days, I believe, in a week or so. And then the volume starting to go down, and this is what the volume looks right now. So this is not very volatile right now. So that's why the price is kind of consolidating for the last day. Now that's it for the volume. Let's jump into our next indicator. So our next indicator is actually very important. It's called the relative strength index. So this is it over here. There we go. So once again, if you wanna get to it, you go to the indicator bar over there, type in RSI, relative strength index, you click on it, it's going to pop down below the chart over here. So as you can see, we have this line, and this line means if we go, if this moving average goes above the line, that means that we are in overbought territory. So basically what this shows, what this indicator shows, is overbought and oversold. That's the simple way to put it so you understand. So if we are very low over here, that means that, so over here we were kind of oversold. Now because of my desktop, it doesn't show the actual numbers here, but as you can see, we are not overbought right now. And if we go anywhere above the 70 level, that means that we are overbought. So if you point your mouse or your whatever to the line on the left over here, you can see where we are right now. So right now we are on 58.4 level. That doesn't mean that we are overbought, but we are getting close to it. So over here we were at 86. That was overbought territory. Look at this. Over here we were at 91. That means that we were very much overbought. So this technical indicator is very useful to use with the MACD technical indicator, which is the next one that I'm going to talk about. And we bring it up on the chart. So there's this little eye icon where you can hide your technical indicators, and that is very useful. So I just want to hide the volume for now. So this is called the MACD, the moving average convergence divergence. So that sounds kind of difficult to understand at first, but basically what you want to take away from this is, and again, I'm going to have websites linking to do a better job of explaining it to you. So what this is basically is, it shows you whether the price is volatile or not. So once these two are far away from each other, that means the price is not volatile or not that volatile. But once they come close together, that means the price is reaching some sort of level of volatility. And we can have bullish crosses and bearish crosses, like with the EMAs. I talk about them all the time in my videos. So if a 20 EMA crosses from above the 55 EMA, that is a bearish cross. That usually drags the price down. The same thing can happen with this as well. So if the red average crosses the blue one from above, that sends the price down. If it crosses from below, that sends the price up. So this is a very useful indicator to use alongside the RSI. And once again, I'm going to have links to all the websites that can educate you a little bit better on this, but I'm just doing what I can in a short amount of time to show you the basis of these indicators. Now, jumping into Bollinger bars. Once again, come into the indicators, you can type in BB, and that will bring you the Bollinger Bands. Actually, not bars. Yeah, I do apologize. It's very late over here, and I'm a bit tired after work. So the Bollinger Bands, they actually are kind of the RSI, and I'm going to explain why in a second. So as you can see, they have this little channel over here. And once you are trading in this channel, the price isn't very volatile. And what that means is, basically, let me start over again. Once the price comes out of this channel, that means that you should sell. That is basically what it shows you. Look at this. It was out of here. You should have sold over there because the price did go back down, and you could have bought back in over here. Now the price is moving good, and once it breaks out and it comes out of the Bollinger Bands, you can start selling, because that is very useful. I didn't use this before, guys, but now I'm getting into the Bollinger Bands, and this is a very good technical indicator, and I would recommend using it. And I will have a link down below in the description, so you can use this. Very, very useful, guys. Now moving to the last technical indicators, and these are not really indicators, these are patterns. So let's just get rid of that. And I do have a very good website here that is going to have all the all the patterns that usually occur on charts. And these patterns have been created a long time ago. And the most popular ones are the ascending triangle, the descending triangle, which is what's happening with Bitcoin right now. We're in that descending triangle, and the head and shoulders patterns, the inverse and the head and shoulders patterns. So these are the two most popular ones, but there are a lot of patterns over here. I'm not going to go all over all of them because that would take ages. I'm going to have a website that's going to link all of them in the description. So yeah, guys, this is a lot of stuff that you want to learn, and I'm just giving you the basics. Hopefully this did help. Now I'm going to bring to your attention two more websites that are going to help you uh, very much in your research. So this is CoinMarketCap and this is CoinMarketCap. So CoinMarketCap shows you, it basically ranks all the cryptocurrencies by market cap. And you can filter and research any cryptos you want. This is good for searching, for example, for low cap cryptocurrencies, for hidden gems. You can see the, if you basically go to, for example, Ethereum over here. You click on Ethereum, if it's going to load up. So you can have the circulating supply over here, the max supply, total supply of coins. You can see the volume in the last day. You have the market cap over here. You have all the exchanges that the coin is on, and this is a very good website. Now, the other one is CoinMarketCap, and I do use this a lot to buy coins. So this shows all the events that are coming for cryptos. So you can have this. You can search for upcoming events, and you can also type in whatever coins you have. So you can search for top 10 coins, or you can search, for example, for any coin that you're looking for, refinance, for example. You click on that, and it's going to show you all the uh, just click the search over there. It's going to show you all the events that are coming. So yes, this is really really good, really helpful, guys, for you. So yes, a lot of knowledge in this video, guys. Use the links in the description to further learn about these technical indicators and these websites. Use these websites; they're very helpful, guys. So that's been it for this video. Very long video, almost 30 minutes. I do apologize for that, guys. But if you did sit through all of them, all these 28 minutes. I do thank you, guys, and hopefully you did learn something new and something useful. I know that not all the indicators got enough coverage, but I can't really go on for that for much longer. So you're gonna have to do your own research to further understand them. But I did give you a basic idea of what they do, and they're all the indicators that I actually use myself. So yes, thank you for watching, guys. Leave a comment down below saying if this video was helpful, or do you want me to have separate videos for separate indicators, guys? Let me know what you thought of this. Trying something new here. So yeah, see you in the next one. Bye.